Hi, everybody. Good evening. Good evening. Good evening to you all as I just get all queued up here, right here. Another Sunday night, super spectacular Sunday night, isn't it? And good to have you all here. All right, look at all the people. Wow, lining up to get online here. Wow, holy so come on in, gang. Lots of room in the front here, lots of room here. And just going to give you another minute or two to get caught up because I don't want to leave anybody behind. And as we are waiting, just gonna remind you a couple things, little housekeeping here. Excuse me. One of the things I want to tell you is that sometimes I get very passionate about what we talk about here. Of course, I've been doing this for a long time, so you're very excited about options trading. In fact, you would think that after all these years that I would be sick and tired of doing this, but I'm not. Actually, I'm just as excited today, even more so than ever. Because once you understand how to make money on the market, it just seems very exciting and more fun and just people sometimes say, yeah, Hugh, you ever going to retire? So I figure the way I figure it is that if I enjoy what I'm doing, I'm not working a day in my life, right? So I don't consider this work at all. Anyway, just having a lot of fun doing this, a lot of fun. All right, well, folks, it's 8:02. Let's get started here. And good evening again, everybody. Welcome to DayTradeSPY.com's Week Ahead, Intro to Trading, Week in Review, Week Ahead, whatever you want to call it. My name is Hugh, and I'm going solo here this evening. We are going solo, and I just want to make sure. Yep. All right. Aaron's got the night off here, right? It is Sunday, October the 27th, as we head into the end of the month, believe it or not. This is the last Sunday night session of the month, and we got Halloween just around the corner, right? Thursday, Halloween. Exciting. So, well, it's not really exciting. It's just, it's exciting for kids, I guess. I don't know, do they even still knock on doors and yell trick or treat? I don't know. I know we're ready for them. We are going to be ready for them. So, and I have a lot of fun on these days. Um, it's so funny. Yes. Okay, let's move along here. All right. I'm gonna let you read this disclaimer. Keeps the lawyers happy. I guess they have to eat too. So, by attending this webinar, you understand, and accept the financial risks involved in trading securities. I'll let you read this on your own, folks. Give you a break from my voice. All right. You alone are responsible for all your own trading, and past performance does not guarantee future results. Charts courtesy of Schwab, Think or Swim, and also Tasty Trade if we have those up. So, all right, let's take a look here. There I am in living color, and just laughing. Just thought of something funny. So my wife and I were over at Costco earlier today. I always make her laugh. I think part of my job as her husband is to, and she is my wife. We're always trying to embarrass each other in public. You do that, right? You go with your wife, you just try and embarrass her somehow. So at Costco, you have to scan your card now. Excuse me. So all these people around, and I go up to the girl there at the where she has to scan. My wife's saying, "Hurry up and scan your card." I just look at her and says, "My English not so good. My English, I do not speak English." She starts saying this. My wife just looks at me, just walks away. Played up the part. Anyway, you had to be there to appreciate the joke. All right, use the questions box, folks. You'll find the little icon on your Zoom dashboard. Click on that. I am the only one that sees that. Go ahead and say whatever you want, and we'll certainly try and answer all your comments and questions. All right, and we'll continue on here. Our hosts, yours truly. My name is Hugh, and just want to tell you that most of what I teach, I learned from the trenches. Yes, deep in the trenches. The guy got dirty. I got all muddied up and brushed myself off and went forward. I blew up my account probably more than anybody here online over the many years. Yeah, I probably lost more than anybody. But you know what? I always try to take away a lesson from every loss. And sometimes you have to learn the lesson over and over and over again. It didn't stick. So unlike the mud. But what happened was eventually you stop doing those things that don't work so well and you do more of those things that do work. And eventually you actually start making some pretty good money on the markets. Not to say that I never fall back, right? Still slip back once in a while to those days, but always have to be reminded. So you have to stay on top. One of the things I think I learned the most was you have to be on your game 100% of the time if you want to get good at this. 95% is not really enough. Okay. It's just not enough. I think you really have to I think you have to be on your game 100%. If you're not 100% with it, don't trade. It's better to not be in a trade wishing you were than to be in a trade wishing you weren't. All right. But anyway, I look at short-term breakout trades. That's what I like to do multiple times daily. I like to just skim a little off the top every time, because when you do that, you're actually building up that cushion. So let's say in the course of a day, I might have 5 trades where I made, I don't know, $100 each, $100 each, right? So you got a cushion now of $500, which means that if that sixth trade does turn against me, and let's say I take a loss for a couple $100, well, I'm still up $300, right? So the way I look at it is if you just continue to keep edging that cushion higher and higher, you should be okay. At least it's worked for me. I'm not always trying to go for those home runs. Every now and then we get them, but more often than not, it's those singles and doubles that are going to win the game. And I think that's really kind of important. Excuse me, I've been talking all day here, so I have to have a drink of once in a while to clear my throat. Anyway, my associate here in the trading room with DayTradeSPY, his name is Aaron Stevens. He had mastered this deep dive technical analysis back when he was in his teens. I believe he was 17 years old when he first opened up his trading account. And I'm not sure if he was trading before he was driving a car. I'm not really sure about that, maybe. But he worked as a technical analyst for a $150 million commodity fund before leaving that and joining us here at DayTradeSPY. So what happened was we started this company by fluke many, many, many years ago. 2010, I started trading and teaching people, taught people from around the world, many, many thousands of people around the world. And then a couple of years ago, Eagle Financial Products, a division of Salem Communications, bought us out and brought on Aaron Stevens as well. So I like to say we doubled our firing power, but actually a lot more than that because you get a lot of synergy when you bring in two completely separate traders who are looking at the markets with independent indicators. And we have a saying between the two of us that when our indicators unite, our trades ignite. Very true. So where Aaron likes to look at the geometry of the trades, looking at the charts, I also look at certain key indicators and also fundamentals. So if I say the market's going to probably go up, and if he says the market's probably going to go up, you might want to buy some call options because I think the market's probably going to go up. You're probably in a safe bet to do that. But anyway, Aaron and I, we run the trading room together every morning, and we do very well with it, as a rule, as a rule. Tonight, we're going to discuss a review of last week, preview of next week. Look at the 2 to 5K trading room challenge, give you an update on that. I'm going to take you out to the cornfield. It's just a beautiful fall day today, and kind of nice to go out there and just kind of, you know, pick through the remnants. I don't know. Anyway, we'll talk about your challenges, tell you how we can help you. Going to give you a 2-minute tutorial. Also going to give you a little bit of a peek at my trades on Friday and answer any questions you might have. All right, so please use the questions box. Hope to get to all your questions. No promises, but we'll see what we can do for you there. All right. All right, so question comes up, why trade options on SPY? That seems to be a very laser beam focus on my end, and I'm not looking at all these other companies and exchange traded funds and different things. Well, frankly, SPY is the stock that tracks the S&P 500. Now, if you look at the SPX, and this question comes up every now, why not trade the SPX? Well, the SPX is very expensive. The SPX is the basket of the top 500 stocks. All right, so it's actually very expensive. Options are very expensive. Liquidity is, I don't know if it's the same or not, but I know the volume is a lot less. SPY is just actually the greatest tradable instrument out there, right? The volume is phenomenal. It's in the millions every day and very liquid, nice tight bid-ask spreads. Highly diversified. It's the most diversified stock out there. All the market sectors are covered. Like you say, it's highly liquid. The fills are quick, tight bid-ask spreads, which is very important. Last thing you want to do is buy an option that might have, say, a 10 or 20 or more bid-ask spread, because now you have to make up for that spread alone. You haven't talked about commissions or movement in the stock itself. I think it's very important to have nice spreads. SPY is also relatively predictable and also forgiving. So in other words, even if you happen to be in a short-term bad position, just hold on. If you have enough time, you're probably going to be okay. I think that's very important. SPY is also very affordable. Most people can afford, a few $100s on a single option, although I don't recommend buying a single option. You're not going to make much more than coffee money. And even at that, most people, I'm guessing, I don't know for sure, but I'm thinking they're buying more than just one or two contracts. I know some people are as they start out just to sort of test the waters, but when you start getting into it, you're probably trading, more than that. So 5, 10, 20, 50 contract, whatever you can, right? I just find it's the best tradable instrument out there, especially if you're new to options, new to trading, new to everything. All right. So very good. Just an excellent stock. A lot of potential to be made on there. So, all right, just an announcement here tonight, folks. Spy on the Market. This is the newsletter that I write every week. You're going to get this in your inbox every Thursday. It's just a very brief 3-minute read, roughly light, relevant, entertaining. All you have to do to subscribe, just go to the website daytradespy.com, and when the pop-up comes up in the top there, in the front there, just leave your email address. That'll put you on the mailing list for Spy on the Market, and get this newsletter every Thursday. It's actually a pretty cool read. And this week's topic is going to be redundant indicators. Redundant indicators. I think you're going to quite enjoy it. Redundant indicators. Okay. All right, moving along here, folks. Week in review. Let's just take a look and see what happened. Here's what the week looked like. This is an hourly chart on the week. And let's just take a look and see what happened on Monday. Monday was a low, no news day. All right, not much happened on Monday. SPY bounced between major support and resistance levels. Came down to test, this is about 581, a little bit lower, 580 and a half. It tested the 584 up at the top end, and the bears got a hold of it, wrestled it down. But as soon as it hit that 582 level, again, very much a technical trading day, much in the range there. The bulls got a hold of it in the afternoon and pushed it up higher. You got some pretty good basing in there for much of the day right in here. Where did it go? Right up in here. I think I'm going to change the color of this. Hang on, let me see if I can do that. All right, erase this. There you go. How does this work? Still trying to work this. There we go. Erase. Okay, and I think if I don't want the eraser pen, highlighter. Okay, let's make it a different color so that it's a little bit easier to see. So right in here, we had some basing in here, and then the market shot back up, closed up around just under 583. On Tuesday, much of the same, similar to Monday. Low, no news day. 581 triggered buyers right down here. All right, we opened up down here in this range in here, and the buyers triggered and shot the market up, came back down, ended the day higher in technical trading, and then come Wednesday, well, we had existing home sales, and it knocked the price down over the edge. Middle East tensions, all right, this bombing going on there between Israel and Iran, or you kind of lose track of who's bombing who now, but it's not very pretty over there. Put SPY over the edge. Then we had the beige book reading here in the afternoon at about 2 o'clock, and they must have said some pretty good things because SPY came back up right here. By the end of the day, recovered much of the loss. Okay. Thursday, excuse me, Thursday. By the way, I should tell you to go back to Wednesday. Whenever you see this setup happen like this, whenever you see a major support level and SPY breaches it, goes down, all right. They say the market goes down about 5 times as fast as it goes up. I don't know if it's 5 times, could be 3 times, could be 10 times. But if it starts going down like that, jump into your puts. Because chances are, if it's going down, it's going to down for a reason. And buy the puts that expire fairly soon. You don't have to wait a week or two out with puts because the market moves pretty quickly. You're probably going to make some pretty decent money. You're going to make some excellent money here between, this 580, 582, and all the way down to, 575, 576, this level down in here. You could have made an awful lot of money on that, right? Pick it up just before of course, you don't know when it's going to happen, but this support level, this is on a 5 minute chart, what I'm showing you. Actually, it's an hourly chart. You see some bounce first on the 1 and 5 minute chart. And when you see that support level kick in, which we show you how to identify, then get out of the trade. It's now done. And it looks like the market's going to be pushing back in, as you can see on this large, this green candle here with the long tail, right? That's telling us this move to the downside is now over. Markets are pushing back up. Again on Thursday, PMI reports, unemployment claims, new home sales. They took out those earlier gains. Market came back down and then pushed back up by the end of the day here. All right. We saw some afternoon buyers after SPY hit 578 support down in here. And that was all it took to move it higher. On Friday, earnings, especially Tesla. Tesla enjoyed, I think, about a 22, 23% growth in the stock, which is phenomenal. Pushed SPY higher, triggered a technical sell-off up here at about 584, and down she came. All right. Down she came, right? Higher bond yields also interrupted the market's streak of gains. And we came down, wrapped up the day just around that 579 level down there. That's it for the day. That's it for the week. And here's what happened. Week-in review. The market's 6-week streak of gains were interrupted due to rising bond yields, attracting investors away from equities. Stronger than expected economic data dispelled fears of a near-term recession, and there's a little bit of a shift in the Fed's expectation. Now they're looking at this mild upside surprise inflation led to a more gradual, shallower rate cutting cycle. We had a number of Fed members speaking about this. They're saying, well, you know what may have been a 50 basis point rate cut. We're now bringing that back down to a 25 basis point rate cut, possibly even a no basis point rate cut at the next meeting in November. So we're going to see what happens. They're still looking, a lot of them are still sitting in a wait and see mode, right, to see what the numbers are going to shape up like before they go and make these decisions as to what, if any, um, interest rate cuts that they're going to see in November. Might even, who knows, might even wait until December before they do the next rate cut. We've got some sustained rise in the productivity. It's expected, especially with the adaptation of new technologies such as AI, keeping us out of a major recession. Concerns over the upcoming elections, of course, and the U.S. debt. Stimulative fiscal policy may force Feds to leave rates higher. I was reading that no matter who is going to be the winner here with the U.S. presidential elections, expect the U.S. debt to increase substantially. I think Kamala Harris, what, $3.5 trillion, and Trump is, I think, I know it's 6 trillion. I can't remember which way. Maybe I got that wrong, but they're very much in a spend mode. They want to buy your vote, and isn't Elon Musk buying votes for $100 a person or something? I don't know, whatever it is. So can't keep up with all that rhetoric out there, folks. That is for sure. But here's what happened. Here's where they're thinking here might happen. Here's the rollout from a year ago as to who's going to win here. Kamala Harris was just, of course, she never announced her presidency until not that long ago, and then we saw how she came up out of nowhere here, and she gained some traction. Trump, on the other hand, which is the red line here, he had lost some traction, but looks like he is now leading in the polls. And I'm not really sure if I can just, oh, I did the wrong one on that one here. Let me see if I can erase that one. It's hard to get yellow on white, but we'll see what happens here. I know what, maybe if I just change the color here, change the pen to what color? Orange? Let's try orange. So here we are. We see Trump coming up here and currently leading in the polls. How many more days to election? What do we have? What is it? The 5th? We have 5, 6, 7, 8. What about 9 days left? We're going to see what happens. It's gonna, but this is where they're going to turn the heat up. Okay. Careful, watch what happens. Harris is running underneath here. Looks like she's running out of ideas and policies. I'm still trying to figure out what she stands for, but that's just me. I'm not very smart when it comes to reading into that. But either way, notice that the market continues to go up regardless of who is leading. And one thing the market doesn't like is uncertainty. It can handle good news, it can handle bad news. But I suspect if the house is divided, we're going to see more stability and the markets will probably go higher. Okay. Because then nobody can do what they really want to do. Right? It's sort of a standstill if the house is divided. So, and the market's like that. So we're going to see what happens anyway. S&P actually dropped a point this last week, but still year to date, still riding high, almost 22%. NASDAQ gained 0.2, we're up 23.4% for the year, and the Dow dropped 2.7% for year to date, 11.7%. From a seasonal standpoint, for those who are not familiar, this is a seasonal chart. We've got the blue line, that's where SPY is now, and the red line, of course, is the composite of the last 5 years closing price on the daily chart. Excuse me. Sorry, I'm just coughing here. Well, here's what it looks like from a historical standpoint. We actually rose about 1 point over last week, and seasonally again, SPY rose about 3 points coming into the following week. Now, there's no guarantee that the market's going to continue on like that. But it's kind of nice to know where it has been in the last 5 years, just to see if we're going to follow along. And I'm thinking here with the elections and the push to the upside, we're still in a very nice upward trend. We've still been seeing, as a rule, some new records being broken. I don't like to necessarily go against the grain when it comes to that. So probably pushing to the upside again this week, especially with earnings coming out. We're still in earnings season as we head into the week here. Monday, expect a low, no news day. Things start picking up on Tuesday. We've got a consumer confidence report, JOLTS job openings, and we have earnings. Earnings on Google, Visa, AMD, McDonald's, HSBC, Bank, Pfizer. On Tuesday, we've got some GDP numbers, non-farm employment change, pending home sales earnings on Microsoft and Meta, which is Facebook. Thursday, unemployment claims, PCE, personal consumption expenditures, which is actually a pretty important number that the Feds look at for inflation. Also on deck on Thursday, Chicago PMI and earnings from Apple, Amazon, MasterCard, I guess it's Merck, Uber. They'll all be reporting their earnings. And on Friday, we have the unemployment rate, hourly earnings, ISM PMI reports, Exxon, Chevron. They'll also be reporting their earnings. Q3 earnings season is in full swing, and we're coming up to the busiest week of the season this week now. We've got some big names, folks. Google, Apple, Microsoft, Meta, Amazon. These are the big names that are going to be presenting here this week. I think you're going to see some movement, certainly some volatility on the markets, right? I expect it to be low on Monday, high Tuesday through Friday. All right, haven't even talked about the Middle East crisis or anything, but I expect markets to be choppy as major tech companies report earnings, and of course the election rhetoric ramps up even more. There's going to be a lot of news coming out, I'm sure. And we also have, I didn't even mention this, but the whole Middle East situation too. So I would look at following quick breakout trades. Keep the stops tight, and just pick up little gains along the way. Should be okay. All right, Daphne, there's our girl. Daphne's with the magnifying glass. She says, we're going to show you how to spot them, how to trade them. That's the many opportunities that are provided to us on a daily basis. Excuse me. If you look back at the charts, you'll see the opportunities on options. They fall in fairly regularly, and definitely can make money in the market every day. Right now, we're going to flip over to the 2 to 5K challenge. You'll see this, well, we're giving you the update now. This is exclusively done in our trading room. You don't need to buy anything extra or something special, no other subscription. This is something we do in the trading room. If you're not in the trading room, get into the trading room. Our goal is to turn 2,000 to 5,000. We started this back in September the 16th, trying to get this done by November the 5th. And again, it's in trading room live every morning. I will admit it has been a challenge. We've had some setbacks. Our $2,000 is down to 1525. Here it is right here. Where did it go? This is it right in here. And we had a good day on Friday. Wednesday and Thursday, we lost a couple $100. But I will say that had we stayed with it, in fact, what happened was we started using stops on that. The stops took us out. But on both of those days, Wednesday and Thursday, had we stayed with it, oh my gosh, we'd probably be pushing the $5,000 mark right now. All right, we did actually determine the direction and even the strength, but the market retraced enough to take us out on our stops. We tried to just follow the rules on that. Okay, well, the stop took us out, it took us out, and then still watching it, market reversed back down in our direction, and we would have been actually sitting real pretty right now had we stayed, but we didn't. So we've got $1,525 to work with. Starting Monday, we're going to see where the stock takes us. Our plan is to get a little more aggressive. We are now looking at 3 days to expiration trades. So tomorrow we're probably going to be trading Wednesday's expiration, and I'm going to be doing more collaboration with Aaron's deep dive analysis. Up until now, for the most part, I've been just looking at my own indicators, but we're probably going to be collaborating a little tighter with Aaron's analysis, and so we may not be getting into the trades right away because he has to get in there and do his analysis first. Usually it takes him a few minutes, but we'll certainly try and get some longer term trades there. And then we're going to run with the trends. All right, we're going to run with the trends, and yes, we are going to use stops to limit losses. Hopefully, we don't get taken out. But the objective there is to not blow up our account, especially when we have just a little bit left. We want to make sure this thing turns back around and delivers on profits. Okay. All right, let's move along here. 2 to 5K challenge. This is something that we do in the trading room. If you are not a member, you probably should be. Okay. Tell you a little bit about the trading room. In fact, we have some services here in the DayTradeSPY program that is sure to appeal to just about anything that you're looking for. I like to think that the trading room is probably our best program in that we actually teach you. We teach everything we do. Okay, we don't hold anything back. Aaron and I host this every morning, and this is what we do. This is not something we do on the side. This is what we do. We focus in on this. We teach you how to trade. Of course, we have training sessions and different things all day, and we spend a lot of time in front of the markets every day. So we've been doing this a long time. We're experienced. Aaron and I together, we have over 40 years combined market participation. If you're not in the trading room, think about this. Wouldn't you rather have somebody who is very experienced in the trading room to guide you and protect you from yourself? When you think about it, it's not a cost. It's actually an investment in your own trading, right? You want to make sure that you're covered and that you're kind of protected in the best way possible. We have we have a bit of I guess I want to call it where we sort of we're a lot of things come to us, a lot of news hits us, like we're lightning rods to, we attract different news items and different things that we can pass on to you. So trading can be, very lonely, but you don't have to go it alone. Not when you have Aaron and myself every morning sitting here, essentially holding your hand and guiding you to profits. That's kind of what we do. Our trading rooms are interactive, so you are able to write in your questions in the questions box, and usually get them answered in real time, real market conditions. The sessions are fully narrated. These are not watch you and Aaron trade sessions. They are learn and earn sessions. That's what we do. And this is where our strategies come alive. We talk about our various strategies. We've got, of course, the 2 to 5K challenge. We have our OMG strategy, which is short for out of the morning gate. Our bread and butter. We've got different things that we do and we talk about to get you moving and making money every morning. These sessions are actually recorded too. So if you happen to miss them, not a big deal. You can go back and review them. As a member of the trading room, you'll have access on our website for members only, where you can go back and view the recordings. Every morning we do this 9:20 to 10:30 Eastern time. And again, this is the home of the 2 to 5K challenge. This is the trading room, folks. Trading room has been going since 2015. I believe it's the longest running trading room that I know of anywhere. So must be doing something right if they still have us here. So, folks, the inner circle is the other thing I want to talk to you about here. Okay, the inner circle. This is where you get your morning market assessment. We send this out every morning around 9:15, 9:20. Just lands in your inbox, and you'll also get a follow-up report later in the day as to what we actually did. In addition, you're going to be invited to our Wednesday night meetups. These are also interactive, informative, engaging. They are recorded for later review. Any questions at all about SPY or the charts or anything related to trading, day trading SPY options, this is where you can ask the question. Just delves a little bit deeper. You don't have to be a member of the trading room to be part of the inner circle. These are all separate, independent subscriptions. I should tell you that I'm thinking here most people who are members of the trading room are also members of the inner circle and vice versa. We have people that have all of our services and they enjoy the whole thing, right? The inner circle is the most cost-effective service that we have. I can't even tell you the price. But if you do want to get involved in any of these, you have to email customer service, all one word, customer service at DayTradeSPY.com. I should write that down, actually. I will in a little bit here. I also want to tell you about our signal, our SPY signal. These are specific options sent to your cell phone as a text message, also to your email. But I find that going to your cell phone is faster. So wherever you are, stop what you're doing, pull up your app, and buy the option that we tell you, because within the first couple of minutes, you buy the option, immediately put up for sale for a 5% gain. Sit back, relax, and the market should fill your 5% target price fairly early on. Now, in case you don't have a sale, you simply sell it at the end of the day for whatever the market will give you. We are aiming for a 5% target price, and the signal is delivered to your cell phone and also your inbox 3 to 5 times a week. And these are morning positions, all right? They are in the morning. So Day Trade SPY signal is enjoying an 87.3% success rate. Not at all bad. Bringing you to the next one is the pick of the day, similar to the signal, a little bit different. This is actually, excuse me. This here is a specific option that is sent to your inbox every morning between 9:30. And the idea here is to simply buy it at the market open. buy it at the market open, okay? And what you want to do there is put it up for sale as soon as you buy it for a good till cancel order for 6% profit target. Now, if you don't get filled, all right, you could hold it overnight, which really I kind of suggest, but at the same time, we were told that we have to have a stop. We've been using a 40% stop loss on these things. Personally, I find I don't really like stops. Um, but and very often, if you don't use a stop, these options will fill the next day. No guarantees, but especially for newbies, if you really insist on a stop, use a 45% stop loss, and you'll certainly preserve most of your capital that way. But again, it may be held overnight and should be okay. So the pick of the day, and also very successful, another very successful um, program that we have. I want to insert the text box in here. Okay, there it is. Customer service. I want to write this in here. Service at DayTradeSPY.com. Let me see if I write this in here. I want to make this nice yellow. That's who you should. Did I spell it right? Yes. So any of those programs I just talked about, right? Trading Room, Inner Circle, DayTradeSPY Signal, DayTradeSPY Pick of the Day. Any of these services, you can go to our website and buy them. I'm going to tell you something. If you email customer service at daytradespy.com and ask for the best rate on any of those services you're interested in, or all of them, you will get a better rate. All right, you'll get a better rate. And so that's what I highly recommend. All right, just note that address, customer service at daytradespy.com. Ask them, say, what's the best rate for the signal, or what's the best rate for the trading room this week? And they'll give you a number and talk to you and see what you want to do. Never any pressure. Also, should mention there are some money back guarantees with this stuff too. So if you really don't like what you are seeing here, you can always ask for your money back. No problem. No questions asked. You don't have to jump through hoops or do any crazy stuff to get your money back. You just tell them, and they'll give you the money back. Now for our 2-minute tutorial, folks. Let me see if I can do this in 2 minutes. Probably. Big question I get often heard is, well, what's the VIX doing? What's the VIX? The VIX is what they call the fear gauge volatility index. When the VIX goes up, the SPY goes down. When the VIX is low, the SPY stock goes up. The question is, should I use the VIX? And I'm going to tell you the answer is my answer is no. Very simple no. Why? Because it is contemporaneous. There's a big word. There's the word for the day. Contemporaneous. What's that mean? It means it moves at the same time as the stock goes. So, and I'll show you in a minute. I don't see any forward-looking features or characteristics about the VIX at all. And I never understand why they say, well, the VIX is high, so the market's low. I'm thinking to myself, they occur at the same time. Everything happens at the same time. What kind of forward-looking information can you possibly derive from the VIX? Let me explain this to you here. Here is a chart. This here is a 5-minute chart on SPY, as you can see. And I'm going to superimpose the VIX indicator on the SPY. Here it is right here. You can see that, let me see if I can, here's my highlighter, my trusty highlighter. As the price goes up, the VIX goes down. As the VIX goes down, the price goes up. As the VIX goes up, the price comes down. What advanced information are you getting from any of this? Price goes up, VIX goes down. Take a look at this. The VIX really shot up here, right? Really shot up. And what happened? the price of the stock came crashing down. So unless somebody can show me otherwise, I see no value in the VIX. In fact, this is one of the things that we're going to be talking about in our Spy on the Market newsletter, which you're going to get on Thursday, along with some other redundant indicators. All right. So the idea here is to don't get pulled into the information overload or analysis paralysis. Analysis paralysis. Very easy to get into this. So I like to use simple indicators, and these are the things that we teach. So I'm not going to get into all that here, but I like to use simple indicators. And because the market only goes up and it goes down, and a little bit, it can't go any other way, right? It goes up and it goes down, it goes down, it goes up. So if you have some very simple, straightforward indicators that can kind of show you certain things, in other words, chart patterns. We are going to, by the way, have a webinar on chart patterns, a workshop. So right now, in fact, I am going to tell you when that is. So if you want to write this in your calendar, Wednesday, November the 20th, 11:30 a.m., we're going to have a workshop on chart patterns. Write that down because you're going to want to get in on that. So I like to use some very straightforward indicators, simple, keep it as simple as possible, and I like to make money. So while other people are analyzing and analyzing and analyzing, you know, my trades are going, just had a win, another one, another one, another one, another, and I'll show you in a little bit. So I find that's very important. I had a guy years ago, Mike, from New Jersey. He was a very good trader. He went through my course, became a very, very good trader. Of course, off he goes. And a while later, he contacted me and said, Hugh, it's not working anymore. What's not working, Mike? Your system's not working. I said, so we went back and forth, back and forth. Eventually, I said to him, Mike, I want you to tell me everything you see on your charts, everything. And then he starts talking about all these other indicators that I never authorized to be on his charts. RSI and I don't know what else, Darvis box and all these other indicators. And excuse me. I said, Mike, I know what they are, and I want you to take them all off and throw them in the East River. Well, I said, where'd you get those? Well, my friends told me about them. I said, I suspect from what you're telling me, this is why it's not working. You're waiting for all these indicators to fill or set up or whatever it is that you're waiting for, and then you get into the trade. Yep, that's what I'm doing. That's what I'm doing. Yes. And let me ask you, do you find that you're getting in at the end of a trend when it's no longer your friend? That's exactly what's happening, Hugh. Right. Because you're waiting for all of those things to complete or fill or whatever it is. And yet those indicators that I told you about, they are now, they're long past. That trade that you're getting into is over now because you waited too long because you waited for all those other things to fulfill. So I want you to get rid of all of those things. Only use those indicators I told you and how to use them. Because I went through all that, Mike. I said to him, I went through all that. I know what you're talking about. I went through all that. Oh my gosh, I used to have so many indicators on my charts. I didn't know which way to turn. I could hardly see the prices because I had all these indicators and it wasn't working, too many indicators. So, and after he did remove all those extraneous indicators he didn't need, he started making money again, right? And I put the VIX right in there with it. So I want to dispel that notion that the VIX has any value because maybe it does to some people, but to me, I see nothing in the VIX. Yes, I know the price is high and the VIX is low. And I know when the VIX is high, the price is low. It's very self-evident. Anyway, for that reason, I like to stay away from all of those other crazy, crazy indicators that don't mean anything. So in that regard, taking it to the next step, I'm going to show you this just by using my indicators, my simple little indicators. Here's how much money I made or could have made. Well, actually, I did make. These are real trades, real money on Friday. Now, I'm not going to tell you how many contracts I bought because some things I like to keep close to my chest. But I'm just going to make an assumption that if you'd have purchased 10 contracts on each, and I'll tell you what the numbers would have been after the fact, right? But starting at 9:35, my first trade was 15 cents, right? I took this baby from 480 to 495. Take a look at the time over here on the left, 9:35 to 9:45, 10 minutes for 15 cents. I jumped back in at 9:56 and I took it from 485 to 460, 469 to 485. That's 16 cents in 4 minutes, 9:56 to 10 o'clock. Moving up the line, I still kept going in. 2 minutes later, jumped back in again. 584 calls this time. These are all well, calls up until now. Took it from 460 to 470. Notice I'm only going for a dime here. Picked up 10 cents in 20 minutes, 10:02 to 10:22. Then the market showed some signs of reversal. I got into some puts from here on out. Next one was on the 582.5 puts. I picked up 11 cents. And look at this, 32 seconds. Excuse me. Jumped into this at 11:36.12, sold at 11:36.44, 32 seconds for 11 cents. Next up, 16 cents in 2 minutes, 12 cents in 1 minute right here from 11:40 to 11:41. I wrapped up the day right here with another 11 cents. This one took an hour and a half from 11:41 to 1:11. I picked up 11 cents there from 4:19 to 4:30, again on the 582 puts. Now, had this only been 10 contracts each trade, and by the way, these are all the following Friday's expiration, so 1 week out, my total gains were $910 gross, excluding commissions, had this only been on 10 contracts. Right? Had it been 20 contracts each, it'd have been $1,820 gross, less commission. My average investment based on 10 contracts would have been $43.70. And the average time per trade, 18 minutes. All right, 18 minutes. I was in these trades from anywhere from 32 seconds to an hour and a half. So one trade was an hour and a half, the other one was 32 seconds. Obviously, my average would have been much less. In fact, if I take the 32 seconds and the 1 minute out, let's see then what my average would have been. 23 plus 14. Then my average would have been something like 7.4 minutes per trade. Okay. You'll also note that there's a lot of money to be made in that first hour, where my challenge, if you want to call it that, would have been, whereas in the latest trade where I had to be in for an hour and a half, getting into the noon hour. So it says a lot that when you get that direction, folks, the money is to be made in the morning in that first hour or so, right? First couple hours, that's where the money is. That's where the money is, and lots of money at that. Now imagine making, $910, by just basically around lunch, say 9, 10. Well, if you do that every day, you're talking about 45, 50 on a week. Let's say you trade for 50 weeks. You're going towards $227,500 a year, right? Over $227,000 a year if you are trading a gross of a net of say 910. 910 times 5 times 50, right? $227,500. Now the reality is there's going to be some days where you're not going to want to trade. There are going to be, some days that are holidays, but still is making $200,000 working until about lunch, investing, $4,400 per trade for 7 minutes. Is that so bad? Is that so bad? I mean, I think a lot of people would love to be in your shoes if you to do it that way. So real money, all right, real money. This is not hypothetical, nothing. Real money, real trades. All right, let's get to some questions, folks. And I'll have to take your questions here tonight. Okay. Thanks for your comments, Jim VD. All right, Jim Van D, I should say. Glad you're doing this and enjoying it. I'm loving it. Honestly, my Sunday nights, I consider it sort of, I know it's a little twisted, but almost like a social life. I can honestly say these Sunday night sessions and all the training and the one-on-ones that we did all through COVID there, several years back, a couple years ago. I think that's what kept my sanity through this whole thing. I never felt really disjointed from the world because we've been doing these, long before COVID came around. We've been working from home, from our home office, and working with people through Zoom. So this was a very sort of just a natural continuation of we were doing it already. So I look at it kind of like a social life, So next question from Jeremiah here. Do you still recommend using a 40% stop loss? Excuse me. Well, so what we do is in our trading room, we discuss the trades, okay? And I'll tell you sort of what I'm looking to do in the trading room. So I don't leave you hanging because oftentimes I don't know what I'm going to doing with the trades because just because 10:30 rolls around and I'm in a trade doesn't mean I'm going to close the trade out. I could be looking at, sitting back and anticipating a certain move. At the same time, our bosses kind of want some closure to these trades. They don't like them open-ended. So we say that, okay, if you are new to this, if you don't feel comfortable holding on or holding overnight or whatever, put a stop in there. We like to say, okay, just use a 40% stop loss. It's not ideal, but I find that if you use that kind of a thing, then it seems to work. Okay, at least it kind of satisfies that aspect of it. So we've had a few 40 percenters in the last few weeks, I guess, months. Not very often it happens, but most of the time, had I not used the 40 percenter stop loss, I would have made my profit the way I expected it to. Because markets don't move in straight lines. They don't go up and they don't go down in straight lines. You'll find that markets zigzag. They zig up, they zag down, they zigzag up and down, right? And the market can actually turn on you before it delivers your profits. That's just the nature of the beast. So if you're going to be stopped out in a very tight stop, then you could be leaving money on the table. Now for the challenge, a little bit different. We have some pretty tight parameters with which we have to work. We don't have the capital in which to repair the trades if they go bad on us. We basically we're allowed really essentially one trade a day on that. So using a cash account. Um, there's a question on the board about this repairing trades. How do I repair trades? Well, okay, well, I'm not going to teach you how to repair trades here. That's something we do in the trading room. But I'm going to tell you, every time I look at a trade, I allocate a certain amount of money to that position. Now, I've got some background as a insurance internal auditor. And many years ago, I'm sure they still do it, whenever a claim came in. So let's say there's a fender bender, right? A car hits you and you see, oh, okay, there's it looks at first glance to be a $6,000 repair. Well, what we did was, and I'm sure they still do, I don't know, but we would allocate, say, I don't know, $20,000 as a reserve. Because once they start taking it apart, right? Oh, well, it's not just a fender, but there's a light in there. Maybe there's a little computer component in there. Maybe there's some sensors. We have various other things that we have to deal with. Maybe there's a wheel alignment involved. So you want to allocate a possible greater value to that claim should an additional, charge be put on it. Maybe there's a rental car involved in this. So first glance might have been a $6,000 repair bill. You get into it, no, it's really $10,000, right? And but we'd have, say, because we put this 15,000 reserve in, that we've allocated. That's the sort of liability that we attach to this until the final claim is closed out. And let's say the final bill is $12,000. Well, then we just, we paid the 12,000 out. That's the charge, and reverse the difference, the $3,000, take that out of our liability, right? So I use that experience with my own trades. In other words, I will look at, say, setting up a $10,000 in my mind, a $10,000 reserve for this trade. So I might get into the trade for $4,500, but I still have in the back of my mind another $5,500 with which to repair the trade should I need to. Okay. I am hoping that doesn't happen. But in case it does, I want to make sure that I've got this budgeted in my mind so that, and also in my trading, in my trading account. So I've got this portion that if I need to, I can go in and repair the trade, and I'm still within the parameters of my trade that I wanted to. And then of course when I bought it for 4,500 and I sell for 5,000, I made $500. I didn't have to use the other 5,500. I didn't have to repair the trade. But if I have to repair the trade, I've got that cushion of 5,500 with which to repair the trade. So I hope that makes sense. All right. Should I see a blank? Do you guys see a blank screen here? Anybody see a blank screen? I don't think you're seeing a blank screen at all. Somebody's seeing a blank screen. I hope I pronounced your the name right. Ahmad. I suspect that you may have minimized my screen for whatever something is wrong on your end because nobody else is seeing a blank screen. And I'm not seeing a blank screen going out and coming back to me. So I hope you were able to fix that issue that you had. Sometimes what happens is people, so they log on early, as you should. You hear the music, but you minimize my screen and carry on doing something else. And then when I start the session, of course, you kind of forgot that you minimized my screen, so you're not seeing it, right? That could have been what happened. So. Uh, all right. Question from Jack here. Okay, got the pick of the day for $3.99 a quarter. My card had expired and I didn't realize it had been on vacation. Had not used it for a while. Can I renew for the $3.99 per quarter? Thanks. Jack, I am not the one that handles that, but I believe that they will honor those any special price you got the services for in the past. So what I would do is contact customer service right away tomorrow morning or email them tonight and give them the new card or have them call you or something to set that up and they'll and give them your new credit card and carry on with the program. Okay. I know they've been very good at that, so there should be no big deal with that. So I would do that, okay, because I don't see why they want. That's just a very an innocent error that occurred here where your card expired. So if you have any administrative issues with any of the services, again, just contact customer service at DayTradeSPY and they will take care of you. Okay. Excuse me. Question: is it better to use the pick of the day or go with the challenge trade? Uh, they're both different trades. Um, I mean, the challenge we have been using different approaches. I've been using mostly a safer kind of approach further out, and then I got aggressive and used the same day approach. And we're told, no, don't use same day approach, too risky, especially for newbies. Go a little bit further out. So we're going 3 days out. We're collaborating with each other a little bit more, Aaron and myself. So, we're kind of changing the rules along the way on that one. Whereas the pick of the day is a very established rule that you get the trade in the morning and you buy it at 9:30 when the market opens. Now, along with that rule, you want to wait a few seconds to make sure the bid-ask spread settle in nice and tight. And you also want to make sure that the stock is actually going in the direction of your trade. In other words, if the trade happens to be a put option, you want the stock to go down. But if at 9:30 you're seeing the stock going up, right? You see the pressure to the upside, wait until it turns around, goes back down, wait until you see the pressure to the downside again, then get in. You're going to get it for a discounted price. Okay. So, but I think they're two completely different services, different strategies. They both work for the most part. The challenge has been living up to its name. It's been a challenge, admittedly, but we hope to get that out of the fire, hopefully sooner rather than later. So, but I would go with both. Do you see what happened in SPY futures just minutes before you started the webinar? No, I had not. Rex, I had not seen the futures. Uh, Maybe you're looking at it. I don't know, did it go down, up? One thing about the futures at 8, 9 o'clock Eastern on a Sunday night could be completely different come Monday morning. So the emails, okay, the trading room schedule. Thanks for that, Jim L. Should be going out. If it hasn't gone out already, I will make sure that it does soon after the session here. Um, it's actually sent out by Aaron, and I will send him a reminder to send it out if you don't have it already. Okay. If you do not have it, say by 11 o'clock tonight, email Aaron at DayTradeSPY. So it's Aaron. I think his email is Aaron at DayTradeSPY, AHREN at DayTradeSPY.com. Say where's the schedule. So you should have that soon. Usually sends it out during the day. I'm a little surprised it hasn't gone out yet. So all right, question from Thomas here. Why is the sooner expiration date more aggressive? Okay, so the sooner expiration dates generally have a lot more volume. More people are trading them. They have more activity. They're more volatile. The uh, the moves are faster, and they're cheaper. But you'll see the moves faster on same day expirations. The only thing with that is because the theta, they suck the theta out of it pretty good. And if the stock turns against you and they suck the theta out of it, they're not that quick on putting it back in. All right. So if the stock turns against you on the same day, you could be underwater. All right. You could be underwater. Very easy to be underwater on that. If it goes in your direction, there's a ton of money to be made. So a lot more volatility on same day options. No real safety on those things. At the end of the day, if you haven't filled, you're toast. Whereas when you have further out, a week out options, you've got plenty of time. The moves are not as severe, right? The moves are a little bit more milder, and they'll stay a little bit longer, and you don't have that theta loss. So you got more safety with time. You don't have that safety with same day options. All right. So here's the question about a 40% stop. It's very rare that actually we use a 40% stop. I don't like to use stops, and the question is I still need to win 6.67 times to get back to even. Um, I don't like to use stops, but the trades that we recommend, those are high probability trades. We're not just flipping coins here, all right, to see do we get in up or down or what. It's not that at all. There's a lot of work that goes into determining those trades that we publish. All right, we analyze a lot of technical analysis in there. We look at fundamentals. We look at a lot of stuff that goes into these trades before we actually make a determination whether it's a call or a put. Okay, so you should not be in that position where you think it's like a gamble. All right, a lot of people throw those numbers around like it's a gamble, like you're pulling a slot machine. It's not that at all. Those trades we give you are high probability trades. So, all right, Menard, thank you so much. Nice tip with the DJT, I should say. Your mentos when to sell blessings. Okay, so okay, I know where DJT sits right now. I took 100% profit on that the other day. So DJT, that's Donald J. Trump's Truth Social, and I guess about 2, 3 weeks ago we got into that. I got into the 115 call options for November the 15th. I bought them for an average of 56. I bought a whole bunch of them for 56 cents. I think I sold them for $1.20 or something. I can't remember. Basically, I doubled my money. I thought, you know what, I'm going to get out of it. Because it was bouncing around pretty good. I thought maybe I'll get back into it again, And because we figure if Trump wins, that baby's going to go quite a bit higher, and you'll do very well with it. So I did get my double on that, but I'm probably going to get back into that as soon as Monday opens and see where it goes. So if you're happy with the position on that, then take your profits. If you want to wait until after the election, I suspect it's going to go pretty nicely if he wins, and you could make a lot more than even a double. So, all right, question from Rod. Excuse me. Is the suite which we published, which we actually advertised last week, is still available for $79.95? Rod, I don't know, but here's what I would suggest. I would contact customer service at DayTradeSPY. Um, I don't have Grant's phone number anymore on that. Let me just see if I can find it. I don't have his phone number. I had it last week. Yeah, I can't really kind of stop the PowerPoint to give it back to you here. Um, where did it go here? I think I'm losing my PowerPoint if I don't if I'm not careful here. Let me see here. I don't have his number now, but I would contact if you have his phone number, contact him, Aaron, Rod, contact him, okay, and see if you can actually where did they go here? See if actually you can still get that. I know that they were pretty tight on just having that go for the 1 week, but I'm guessing you could probably still get it. But you should probably call Grant on that first thing tomorrow morning. All right. All right. Is there a special price for the society? That's what we call the society. Look at your email. You'll see a number for Grant. I don't have his number handy. I don't know what the number is. And give him a call. But you should do it soon because I think there was a cutoff period on that. So I don't want to lead you down the garden path that is still available, but do call him ASAP. All right. And he still might give it to you. So, all right. I don't want to keep you guys all night here, folks. Uh, question, why did I get in and out, pay all those commissions? Want to just stay in the one trade? Okay, so the DJT, when I doubled my money and I saw how it bounced up and down, I mean, I think I doubled my money, then it came right back down again to maybe 60 some cents. Now I was busy with something else. I didn't have a chance to actually get in and buy it again. But I think maybe in the next couple of days, it's probably gonna, still bounce up and down, DJT. So I'll probably get back into it when it gets lower again and just jump into it. Um, I don't mind paying commissions with Tasty Trade. My commission is $1 a contract, up to a maximum of $10. So if I'm trading 100 contracts, my commission is still only $10. So, uh, what about the pattern day trade rule? If you have more than $25,000 in your account, including all the accounts. So let's say you're with Schwab, you've got, I don't know, $100,000 with Schwab. You can trade as much as you want, right? Even if you only have, say, $10,000 in your Thinkorswim account. But I think they kind of put it all together. So if you have 25,000 or more, the pattern day trade rule does not apply. If you have less than 25,000, you're only allowed to trade 3 times in and out, round trip trade, in a 5-day period. All right, so make sure you keep an eye on that. If you do get caught with your pants down on that, I think give you good faith violations. I think they give you 3, maybe 4. Then the next one, they put you in the corner for 3 months. The way around that is simply to use a cash account. Trade as much as you want in a cash account. Make sure you have the cash. If you do find yourself underwater with that and they do penalize you for that, just open up another account, transfer the money from your crippled account into the new account, continue trading. Keep an eye on that. All right. Don't uh, don't go crazy. If you're stuck with a pattern day trade rule, make sure that you actually respect that. Okay. Wow, Scott P did very well. Started with the pick of the day in June and added the trading room in August. He said what you say is true. Averaging 10 to 20 contracts per trade in the morning. He's up over $80,000. Nice trade. Scott, nice trade. Okay, Ralph W., thank you so much. I'm new, but I can listen to you forever. Oh my gosh, you're too kind. Tell my wife that. She said, you're still talking. Oh, well, if I don't talk, you do. You don't have anything to say. I said to him sometimes, actually, it's so funny the other day. We were just laughing or howling. I said to her, Dale, her name is Dale Ann. She said, uh, my mind is now blank. I have nothing to say. I have no thoughts rolling around here. Tell me something so I can have something to think about. She's laughing. Nice spot to be in, she says, Yeah, after a while, you just nothing to think about. All right. Tim, good question. Tim B, do you feel pressure to provide a pick of the day every day, even when you may be unsure of the market? All right. The answer to that, Tim, is absolutely yes. And that is one of the things that you don't have to worry about. You guys don't have to worry about, but we do. We actually are under a lot of pressure to perform. And a lot of times I miss a lot of my own trades because I'm narrating the trades for you guys. Meanwhile, my trading platform is sitting there waiting for me to get into a position. Now, sometimes what happens is if there's no obvious trade on the pick of the day, or maybe I should say we don't have clarity, or maybe volatility is really high, then we'll suggest a no pick day. Today, the volatility is too high. The trade is a no pick trade. Now, before when we would do that every now and then, we were criticized by our subscribers. Well, we're paying you for a pick and now you don't have a pick. And I would respond and say, well, I can appreciate that. But the way we see it right now at 9 o'clock in the morning is that there's no clarity. And we would rather that you stay out of the market wishing you were in than to be in the market wishing you weren't. Because if you end up going the wrong way, that's not good either, right? And sorry, sorry for anybody who lost money and going the wrong way on the pick. Very often those picks are designed to be held overnight because there's ample time in those picks. So Mondays and Tuesdays, excuse me, we generally buy same day Friday, same week Friday's expiration. Wednesdays, Thursdays, and Fridays, we buy the following week's expiration. Okay, so we got lots of time in there, low theta loss, and you'll often find that if you hold overnight, you're going to be okay. All right. All right. Okay, let me see if I can get another couple questions real quick here. Okay, the screen seemed to be okay for everybody else. Okay. Okay, thanks for all the good comments on that, everybody. Okay. Okay, yes, okay. So the price of yeah, I got my hands slapped on that one. The price for the society wasn't the 79.95. I mentioned it last week or the week before, whatever. It's actually 99.95. I don't know where I got the 79.95, but it's actually 99.95. And here's the phone number. Thank you for that, guys. Call Grant. And again, the price is 99.95 if it is still offered. I know they do this very rarely. I think this is only the second time they've ever done this, the society thing. So what you get is you get the trading room, you get the pick of the day, you get the day trade spy signal, and you get the inner circle, and you get those for life for the one price, which I believe was 99.95. Again, it was on a limited time. But I think if you give them a call Grant and just tell him that, I don't know, tell me they say, I know I'm a little late. Can I still get it? His phone number is this 202 677 4492. All right. Again, I cannot guarantee they're going to provide it for you, but 202 677 4492 is Grant's phone number, 9 to 5, Monday to Friday. I should probably write that down. Thank you for that. All right. I'm going to write this down, and I cannot guarantee that the offer still goes, but maybe it does, maybe it doesn't. 202 677 4492. And his name is Grant. And let me get this down here. Regular business hours, okay? Regular business hours. Okay, 9 to 5. So tell him you want the society. So you get the trading room, you get the inner circle, you get the pick of the day, you get the day trade spy signal. Now, any future programs or workshops, they are not included. You still have to pay extra for those. Okay. This is just for those 4 services, lifetime membership. All right. Thank you for those phone numbers, guys. That is actually okay. Oh, I should tell you. Yes, good point here, Scott. So if you already my picture keeps freezing every time I click away from it. That's why you see my streaming shot here freeze because I click away from it. But what I noticed is that it always seems to take the worst possible shot of me, doesn't it? My mouth is open or some crazy thing. Anyway, yes, if you have a service already or services, you'll get some sort of credit for all that. Okay, if you do go with the society, you do get credit for that. So it's worth the call. It's worth the call, right? And no, Thomas, it's not $39.99. Anyway, I think with all of that, folks, it's now 9:17. I promised myself I am not going to torture you all night. I said I'm going to just stay here for an hour at the latest, and that's it. But I want to answer as many questions as I could. So I hope you're okay with the overtime, 9:18. Been a pleasure, folks. Thank you all for joining us, and hope to see you in the trading room tomorrow morning.
Shine brighter than the moon and the sun. Be great at what you do. Give it all of you. And trust the process and keep your eyes on the prize. I can tell you.